The mindset of a vulture investor, thinking differently to win big. Welcome back to the Art of Vulture Investing. In episode 1, we talked about what vulture investing is, buying the debt or stock of companies that are close to failure and turning risk into reward. But now, let's ask an important question. What kind of mindset do vulture investors need? Because in this game, how you think is just as important as what you buy. Thinking differently. Most people fear failure. They avoid risky businesses. When they hear bankruptcy, they run away. But vulture investors do the opposite. They move toward the danger. They look at what's falling apart and ask, is there something valuable hiding here? This is what makes them different. They see opportunity in chaos. The psychology of a vulture investor. Let's look at how these investors think. Number 1, they stay calm in a crisis. When a company fails, the media shouts, stock prices crash, and everyone panics. But vulture investors stay calm. They know that panic often leads to undervalued assets. And that's when they get ready to act. Number 2, they are long-term thinkers. Vulture investing is not a quick win. It can take months or years before a company recovers or a deal closes. These investors are patient. They don't chase quick profits. They wait for the right moment. Number 3, they love complexity. Most investors avoid legal paperwork and bankruptcy law, but vulture investors study it. They read court documents, contracts, and debt agreements to understand what's really going on. They know that real opportunities are often hidden in the fine print. Number 4, they control their emotions. They don't get scared easily. They don't follow the crowd. They trust their research and their instincts. This emotional control helps them stay focused when others are losing their heads. Number 5, they accept risk, but they manage it. Vulture investors know they are playing a dangerous game, but they don't jump in blindly. They do deep research to understand the risks, and they only invest when the reward is worth it. Example, George Schultze's mindset. George Schultze, the author of this book, has spent years studying distressed companies. In his interviews, he says, "We invest where others won't. That's where the best value is." He once invested in a company where most people believed the business was over. But after studying the legal case and financial reports, he saw that the company's assets were worth more than its debts. He invested and later made a big profit. It wasn't luck, it was thinking differently, going against the crowd. This is called contrarian thinking. It means doing the opposite of what most people are doing. When others are buying, you're waiting. When others are scared, you're curious. When others give up, you dig deeper. Vulture investors are contrarians by nature. They don't follow market trends, they create their own path. Focus and discipline. Another part of the mindset is discipline. Vulture investors don't invest in everything. They look for very specific situations. A company must be truly distressed. There must be a possible recovery or asset value. The price must be low enough to offer big upside. If these conditions aren't met, they walk away. They don't chase deals that don't fit their plan. 2, seeing risk differently. To most people, risk means danger, but to a vulture investor, risk means potential. Let's look at 2 people seeing the same company. Person A says, "This company is going bankrupt. It's too risky. I'm out." Person B, the vulture investor, says, "The company is failing. Yes, but its factory, land, and patents are worth more than its debts. I see value here." Same situation. Different way of thinking. That's the key difference. Lessons from real vultures. In nature, vultures survive in the harshest environments. They fly high, they have sharp eyes, and they know how to spot opportunity from far away. Vulture investors do the same. They study from a distance. They act quickly when they see something valuable. They don't waste energy on bad deals. A tough but rewarding game. This kind of thinking is not easy. It takes time to develop. But if you can learn to think like a vulture investor, you'll start seeing opportunities where others only see problems. And that's the first step toward big profits in distressed investing. Coming up next. In the next episode, we'll go deeper into distressed securities, what they are, how they work, and how vulture investors find them. You'll learn about bonds, loans, and stocks that can turn into gold when handled correctly. Final words. Thanks for watching Episode 2. If this video helped you understand how vulture investors think, please like, subscribe, and share your thoughts in the comments. Remember, great investors don't follow the crowd. They trust their mind, do the work, and stay patient. See you in the next episode of The Art of Vulture Investing.